decisive change saying that that culture of corporate credit or the era of corporate credit? We had a meeting with Kamath and he said that just like development financial model that collapsed, are we in that era where the industrial credit, corporate credit, that era is over? Because we have seen retail credit, aggregate retail credit has overtaken corporate credit, and that seems to be where even corporates are investing. Even big conglomerates are looking at consumerization as the next avenue of growth, which may not be as capital intensive as setting up a steel and cement plant. So is this a decisive change in India's or bankers' corporate credit culture?
So most of these requirements and journeys coexist. It's not that you're going to shake up the economy and say that from tomorrow the conventional industries will go away. It's a gradual shift which happens as the economies mature. More and more economies become knowledge-based economies. But from Indian context, I strongly believe that with the support of the government and with the employment requirement in the country, and the labor is still cheap in our country, right? The affordable labor. It's not that in many countries labor has become expensive. They just outsourced the manufacturing to other countries and focused on the knowledge economies. But in our case, I think manufacturing will coexist with the knowledge economy. Services are dominant now in the Indian economy, right?
Yes.
So it's not that shift has happened overnight. It's been happening.
It's been gradual.
It's been happening. But I think we need not look corporate funding arrangement only from a bank lens. It has happened in the bank's liability side also. The shift which has happened in the deposit side.
Right.
Savers are not looking only at the banks.
Right.
They are looking at other alternative opportunities, which means that as the economy grows, the distribution of the savers and distribution of users of the savings will be a little more different than what we are currently seeing. But whether banks lose their relevance in corporate credit, I don't think so. As I mentioned, I think we should all look at corporate banking as an option, not corporate lending as our main activity.
Another important point you just touched upon, Mr. Shetty, is that it's the whole nature of savers is also changing.
Yes.
Right? If I have some disposable income, I'd not go into savings rather than investing maybe, because now the markets are a big source of capital formation in the country, and savers are turning to investors, which is a good thing. I mean, people were not doing this after COVID. There's been a huge boom in the markets. Now, how does that work for banks like yours, which are also looking at CASA, for instance?
Yeah.
What is that? How does the bank navigate that?
So first of all, I think the savers and investors need not be looked differently. Primarily, they are savers, right? What they were saving has changed.
True.
I think a lot of people say that saving is converted into investment. Basically, even putting in a bank deposit is an investment.
True.
It's a safer investment. People were probably not willing to take a kind of risk or return a call earlier. Now with the growth of investment markets,
mutual funds, SIPs,
mutual fund becoming affordable and digitally driven, and awareness is also one of the important factors which has happened. I believe that the savers are allocating their savings. I think we have to look from that angle. And what happens in this journey? My observation is that if a new saver is coming, somebody who's having 1 lakh rupees earnings, I'm just giving like youth, for example, youngsters, their first instinct is to invest. I mean, investment product. I don't call it investment products, either mutual fund or something. But as their income levels go up, they will always allocate, because allocation is critical component. We need to make this as a habit among these savers, that as much as you are doing, putting all the bank money in the bank, putting all the money in the investment opportunities also is not a correct option.
Absolutely.
How do you train them that you have to allocate? But I'm seeing that the bank deposits still have not lost their relevance. Right? Today we still open 60 to 65,000 savings account every day. And most of them are, though we start with a zero balance account, they all get funded within a month or two. So I believe the savings in the form of bank accounts, savings in the form of investments coexist. And it's only a matter of allocation of how the funds are being allocated.